Hi, everyone. Welcome to the MIT Social Entrepreneurship Alumni Group webinar, Social and Financial Returns from Gender Lens Investing. I'm Sayuri Sharper, President of SEAG and today's moderator. We're delighted to have three leading voices in gender lens investing join our panel discussion today. They will lead our discussion on why investing in women is smart, both from social and financial return perspectives. They will also cover investment strategies in both private and public markets. Our first speaker will be Patience Marime-Ball, founder and CEO of Women of the World Endowment. Patience is deeply experienced in capital markets, including debt and equity financing, large-scale infrastructure investments, as well as investing in early-stage companies. The mission of WoWE, Women of the World Endowment, is to make the gender landscape more equitable through the power of action-oriented feedback loops and access to the right capital at the right time. Our second speaker is Sharon Vosmek, CEO of Astia and managing partner of Astia Fund. Sharon was appointed CEO of Astia in 2007, and she's been transforming the global organization ever since. The mission of Astia is to invest, advise, and partner with women to level the investment playing field. Under her leadership, Astia has grown to a global community of more than 5,000 investors, entrepreneurs, and industry leaders that make up its investment ecosystem today. Our last speaker is Luke Wilcox, founder and CEO of Ethos. Luke has led tech startups and social impact organizations and strategy engagements for Fortune 500 companies. Ethos is a first of its kind fintech platform to align investors' money with the causes that they care about, including gender lens investing. To support value-based investing, Ethos uses more than 260 credible metrics to rate public companies and funds. This webinar is a conversation, and we would like to make this webinar as interactive as possible. You are invited to use a Q&A button to enter your questions at any time during the webinar. We will get to as many of your questions as we can after the speaker's initial comments. We will not be interrupting the speakers. However, please feel free to put your questions in at any time. Before we get started, I'd like to say a few words about MITC. Our mission at SEAG is to bring together MIT alumni and like-minded people to co-create a better world through social entrepreneurship and impact investing. We are organized under the MIT Alumni Association and are supported by the association for our work. So terminology is important. So what do we mean by social entrepreneurship? We mean any organization that is addressing unmet social need or environmental problem through a market-driven approach. And impact investments are investment made with the intent to contribute measurable, positive social or environmental impact. If any of you are not a SEAG member yet, I'd like to invite you to join us. In addition to the webinars, we also host live pitch sessions, mentoring programs, and other networking events to connect our members to each other. To join, please go to mit-c.mn.co. Now, let me invite Patience, our first speaker, to join us. Patience, turning it over to you.
Thank you very much, Sayuri. And thank you to SEAG for this invitation. I am extremely excited to be on this panel with Sharon and Luke. Luke I've known for a while. Sharon is becoming a friend through this introduction. Thank you very much to everyone for joining us in this room. Maybe I can start with just adding one more thing to the introduction that Sayuri just gave about myself. I started investing with a gender focus in 2009, soon after the subprime financial crisis of 2008. And the impetus of it was a statement by Christine Lagarde, and I think a few other people said it, but I heard it first from her, indicating that if Lehman Brothers had been Lehman sisters, things might have been different. And for me, I started interrogating what might have been different if Lehman Brothers had been Lehman Brothers and sisters. And that is the beginning of my journey of investing at the intersection of gender and the solution to some of the world's most pressing problems. I used to work for the International Finance Corporation and built the Banking on Women business for them. I have been an investor as an angel investor into early stage companies with gender diverse teams. And today, starting in 2018, I sat back and decided that I was going to do a bit more work in the gender intersectional space, and then founded Women of the World Endowment. So a bit of context before I present a little bit more of what we do and how we think about the opportunity that is female. So there's a lot of capital that is being invested without gender considerations. In our view, and in my personal view, this is unfortunate because I believe that gender analysis is actually the secret to unlocking better financial returns and impact returns for all investors. The evidence is clear that when women share in the control of capital, either as board of directors, CEOs, entrepreneurs, borrowers, heads of local and national governments, etc., I could go on. Better social and financial returns are the result. So women are more likely to take the long view. They avoid decisions that prioritize short-term gains at the expense of long-term success. In financial markets, we see that women can innovate and provide solutions to entrenched problems. They also invest in long, sustainable solutions and tend to be more risk-aware, which results in stronger overall financial returns, healthier economies, and wealthier investors. So as we know, there are about $110 trillion of AUMs under management today. Less than 3% of that is being managed by women and people of color. And even less is being managed with gender-focused strategies. So when we look specifically at gender-focused strategies in public markets, we have about $10 billion of assets that have specific gender mandates to their strategies. And that includes mutual funds, ETFs, as well as SMA strategies, separately managed strategies. The good news is that we're seeing a whole lot of growth in the private market space. So between 2017 and 2021, there was a 255% growth in new funds, being launched. Most of these tend to be in the growth space, so early stage space. We also have seen a growth in the launching of funds across regions, different regions of the world. So it's not a US only story, it's not a Europe only story, it's an Asia story, it's an Africa story, it's a Middle East story, which is really exciting. The unfortunate thing is that quite a bit of these funds are heavily weighted to growth opportunities. So early stage venture capital. The problem that we see today is that these companies that are being funded by this early stage capital and offering us differentiated portfolios that are likely to absolutely give us strong returns and impact, financial returns and impact returns. The unfortunate thing is that as they grow, the availability of capital that is there for follow-on for the C and D rounds and so on is not as plentiful. This is the backdrop that I was looking at, and once again, completely excited about the opportunity that is female when we founded Women of the World Endowment. So to tell you a little bit about Women of the World Endowment, we realized that there's a gap, and it is important to develop a 100% mission-focused pool of capital, one that is asset class agnostic, sector agnostic, but focused on the thesis of investing across the capital spectrum, but investing with women as actors as a strategy. So this is not women as beneficiaries, this is not women as victims, but simply finding those women, finding the areas, the strategies where women are being prioritized as actors and investing into those opportunities. So essentially in 2018, we started Women of the World Endowment as a C3 organization with significant ambitions. Our hope is to build one of the largest 100% mission-focused endowments focused on this thesis of women as actors. Next slide, please. So just to give you a bit of more about our strategy. So capital is donated into our corpus. The beginning of this endowment was actually me taking money out of my retirement funds and creating this C3 and beginning to grow it. We've been fortunate that we've had some donations, including donations that have allowed us to actually start our investment strategy. So we invest with this gender intersectional strategy into across the spectrum, early stage companies all the way to public equities. Our portfolio construction is incredibly intentional. We're driving for both risk-adjusted returns comparable to any other market strategy, as well as deep impact. We believe that our emphasis on market rate returns is really important, because this is how we are able to then influence other pools of capital to want to invest with the same sensibilities. With the income that we generate, we use it to do two things. One, to build strategic capital, and we build our strategic capital in a number of ways. We have monthly change maker series conversations with experts where we are not the knots in specific areas of the capital markets. And then we also do deeper prototyping events where we invite experts into rooms where we really grapple with trying to figure out where are the investables, what are the challenges that are in creating friction in capital systems in order to invest into women change makers. Where are those friction points? How can we innovate around them? And more specifically, how can we create and co-develop investable strategies and products so that capital can actually flow? The other part of what we use our income for is to grant invested into nonprofits. Our grant investing is a little bit more upstream than downstream. We don't necessarily do last mile grant investing. We invest in entities that are developing pathways for systems change. And that systems change has to centralize the role of women as actors in how we build more resilient economies. The next slide, please. Thank you. So as I said, the capital that comes into Women of the World Endowment is donated capital. So it is really important for us that we interrogate every single penny that we invest, whether it's investing into our for-profit public markets portfolio, private markets portfolio, or investing into strategic capital, or investing into our grant opportunities. All of it is interrogated using 3 levels of screens. So the first one is simply, what are the things that we do not want to consume? We do not want in our portfolio, and this is what you see on the left side there. We prioritize women, And then we do not want to consume things that are not climate friendly. So it's fossil free, it's prison industrial complex free. It's social related screen weapons, but it's also racial justice sensitive. So we use these screens to just do that first level of screening. The difference between us and others who use screens is that we are sitting behind behind the screens, as it were. We do work to provide strategic input into the development of the screens. We do work that actually looks at the data that goes into the screens, the KPIs that are being developed to actually build those screens. We are big believers in being in the room when tools that inform our portfolio construction, but also other people's portfolio construction are being developed. Second, we interrogate for inclusive access. Are we investing in assets that will actually, help to dig wells for people? But more importantly, and we hope that over time, our portfolio skews much, much more towards inclusive opportunity. We want to be able to have people dig their own wells rather than have other people come into their communities and dig their own wells. So those are the ways that we interrogate our investment opportunities. We use tools. As I said, we are advising into the development of tools, into the aggregation of data, etc. We use tools like As You Sow. Some of you may know of As You Sow. We use tools like Ethos ESG. You will get a presentation from Luke later on. Luke, we found Luke when we're looking for a tool to help us with due diligencing our single name security portfolio on the public market side. Ethos came into our view. We've been using that for portfolio construction, but more importantly, when Ethos ESG was raising their seed round of capital, we are investors into Ethos ESG. I have a seat on the board. This allows me to be in partnership with Luke as these tools that are going to become even more important as ESG investments go from being, greenwashed investments to being, deeply interrogated portfolios. We want to be in the room to make sure that those tools are also centralizing the role of women in problem solving. And so we're an investor in Ethos ESG. We're building, we're doing some work together to actually build tools that optimize across both returns and impact, and being a partner to Luke in a way that will allow us to be in rooms with other asset managers when those asset managers are looking at their own portfolio construction. Our view is these types of tools are really critical because you can be inside a room without an invitation, and you can be inside a room while you sleep when asset managers are doing their work. And this is really important. Next slide, please. So as we look at our investment objectives, we apply an intersectional investing approach across private and public markets. As I said before, the goal is for comparable risk-adjusted returns, as well as making sure that these returns allow us to gain strategic capital that can help us inform into other pools of capital, but also give us strong returns that can allow us to then, realize on our ambition to also be a significant grant investor. So for our public markets, we have a well-performing portfolio. Up until about November of last year, we were, our returns were north of 42%. And this is returns for a portfolio that is really well scrubbed for all the things that we don't want in it. And the things that we want in it, which is looking at women as critical players in solving today's problems and tomorrow's problems. And, since then we've had market volatility like everybody else has, but our returns continue to be north of 25%. And so we're very happy about that. The other thing we're doing with our public markets portfolio is to work with Ethos ESG to create tools that optimize for financial and impact returns. So this is a tool that will, I don't know if Luke will speak to it, but this is another opportunity where we see our portfolio both giving us financial returns, but also giving us strategic returns, strategic capital that can be used to inform others. On the private market side, we started our investments in 2020 and they've seen significant positive returns. We are doing direct investments, we are doing venture capital, private equity investments, and all of them are once again targeted at giving us three things: financial capital, strategic capital, and impact returns. Next slide, please. I'm going to close off with just a note to everyone that this is a space that is really offers an opportunity that not very many investors are onboarding today. It is important that we put into the world as much information as possible, because investing with this gender analysis actually unlocks higher returns, lower risk, makes for healthier economies, healthier portfolios, differentiated portfolios that reach into opportunities that are not always obvious to other people. And so in the last year, I've co-written a book called The XX Edge: Unlocking Higher Returns and Lower Risk. This book is full of data on all the different asset classes and how women as actors have and decision makers, asset allocators actually leads to better returns and healthier economies for all of us. I'm going to stop here and invite Sayuri back into the room. Thank you, Sayuri.
Thank you so much, Patience. It is very inspiring to listen to you. And I have already ordered your book through Amazon. I won't get it until June, but absolutely looking forward to reading that. Now let me invite Sharon, who I'm sure will also inspire us with the work she has done. So Sharon.
Thank you, Sarayu, and thank you, fellow panelists. Patience, I'm so grateful for our new friendships, and I love following you as a speaker. It's so rare when I get to experience just such an educational moment and listening to the speaker before me as it relates to gender lens investing. As I was introduced, I am CEO of Astia. I'm also managing partner of the Astia Fund. And, really what we've been doing for 20 years now as an organization founded here in San Francisco is addressing a fundamental gap in the marketplace, which you've heard a bit about already, so I won't cover the same topic areas. What I'll try to do is augment a bit of what we've learned uniquely in the venture capital space. What we've seen through our entire 20-year journey is that this fundamental chasm that exists between companies that have women anywhere on the founding team and venture capital is enduring, it's systemic, and it is absolutely a perfect example of a missed opportunity for investors. Often I'm asked why Astia invests, and why, as an organization that seeks to align with women, why we choose to become VCs ourselves. And the answer is quite simple. I always talk about our DPI, and that's the capital return to our investors. These companies simply outperform, and you heard it from Patience, and you're going to hear it time and again when you start diving yourself into the topic of investing in inclusive teams. They simply outperform for their investors, they outperform for their customers. And yet the venture capital as an industry has failed to choose to invest, choose to modify its own models, and actually has become further entrenched in prior practices that have led to the current chasm. What do I mean by this? Some of the examples that exist within the venture capital model that reinforce or certainly exacerbate this chasm are networks. Networks predominantly in the financial space divide along gender. It's just a simple truism, and that's global, and it's far larger than venture. But within venture, when you look at the simple numbers of GPs, those who control the investment decision, you find that 92 to 96% of them are men. And while this unto itself isn't a horrible thing, maybe it's indicative of something else, but what it certainly does do is exacerbate this network propensity towards network effect, preventing VCs from investing in women. These are really soft science things. I'll give you some examples, but it's not as if the venture industry has set itself up to not invest in women. It's simply that by being male dominated, it's unable to invest in women. One example, networks are required for introductions. Most venture firms talk about the power of their network to bring them deals, to assess their deals. And then when you look at their networks, not only are their GPs primarily male, their networks are primarily male. And this simply means that women will not be in their flow. These VCs that believe they're seeing the best deals out there are actually choosing from a select network of deals. And this is counter to venture capital's intentions, but is absolutely consistent across the industry. Then once they actually do see a deal, there is this unfortunate bias that endures in our financial industry where women are assessed differently than men. And this, once again, soft science stuff, but pretty profound. Harvard Business Review continues to publish year in, year out, their study that finds that if VCs were to assess businesses without knowing the gender or race of the founding team, they actually would invest in women and people of color equally to the male investments they do. It's when you turn on the face of the entrepreneur and she happens to be a woman and she happens to be Black. These are the elements where bias lives within the venture industry. And unfortunately, it's so profound that venture investments last year into Black women CEOs was 0.08%. This in spite of the fact that last year alone, Black women started businesses at 300 to 600% greater than their white male counterparts, depending upon which region you're looking at. And then I'm often talked to about the pipeline. Is this a pipeline issue? Because women don't study STEM or women don't study computer science. And venture has chosen to believe its own mythology. It has this myth of a pipeline issue, when in reality, for the last 40 years, actually slightly more than 40 years now, women have not only been more than half the population, we have been more than half of the college graduates, more than half of the MBAs, more than half of the law students, more than half of the MDs, and almost 60% of the PhDs. Clearly, we are an educated population. And then when you actually look at our entrepreneurial chops, women are starting businesses at 6 times the rate of their male counterparts. So the pipeline issue falls aside if you actually look at the data. Unfortunately, venture has chosen to double down on its mythology. And so it continues to perpetrate the bias within its networks. It continues to perpetrate the myth that there are no deals to be seen and the myth that they see all the best deals. And what Astia has done and sought to do for the last 20 years is debunk those myths, innovate on the venture capital model, and I'll talk to you about how we've innovated on it, and to fundamentally do what Patience is doing, which is invest in this outperforming class of companies. Now, something to know about this, class of companies is that if you're going to invest in them, it is best to become an expert at investing in them. And so Astia's approach is a multi-pronged approach because, as I said, this is much larger than venture. Yes, we have investment, and it's absolutely that green circle. And our performance, much like Patience's, far surpasses our peer counterparts. But equally, we feel it's important for access to exist. And this is our program where we're connecting the companies we invest in or consider for investment into the high growth ecosystem, really address that chasm that endures. And then we publish everything we do. Most recently, we published a thought leadership piece called Astia Edge, our failure to invest in Black female CEOs and what we've done about it. This is important that we reflect upon our own failures and put them in the marketplace so that the market can learn from our own mistakes, and equally so that our hope is that the industry will take note and start to share some of their own learnings. We believe in an open source model as a means for solving some of these larger and more broadly present social issues. But then I mentioned to you that we've innovated on the venture capital model. And what we've perfected over the last 20 years is a sourcing and screening mechanism that greatly reduces, practically eliminates bias in our screening process. And how we know is that we measure gender, race, age, geography within each stage of the SIFT at Astia. And the SIFT is our mechanism for contemplating investments. And if at the top of my funnel, I have 25% Latinas applying to Astia, I would expect that I have 25% in my portfolio, and that at each stage there would be 25%. And when I don't, as was the case with Black female CEOs, we work to solve for that. And you can read that in our EDGE paper, that not only do we care that our funnel or our pipeline of deals is phenomenally inclusive, we equally care that then fundamentally within our portfolio, we see that inclusion. And true to this case, Astia, within the Astia fund, until yesterday, it was 50% of our portfolios was Black female CEOs. We had 4 investments. We now have 5, and the 5th drops that percentage because the 5th is a white female CEO. Nonetheless, the top of our funnel, we know we have 25% Black female CEOs, and each stage within, we make sure that we've removed the friction. But these are the fundamentals of innovating on venture, measuring your deal flow and the fundamental results within your portfolio. Our SIFT methodology is built on a technology platform. And what it does is it curates opportunities for us. We don't wait for companies to come to us, because what we know is some of the best investment opportunities are hidden gems that venture has yet to discover, and where entrepreneurs have not yet thought about the fundraising journey. And we want to make sure that our community is constantly finding those opportunities for us and bringing them to us. Then at each stage of our screening process, we harness the wisdom of a crowd. Over 5,000 experts help us assess the potential of the business, the market opportunity, the go-to-market strategy, the team's capabilities, all of this while hiding gender and race of the founding team. What this enables is a powerful engine of decision-making to get us to our select set of companies at the bottom. Year in, year out, 3% of the companies who submit to Astia end up making it all the way through our SIFT process. We know it's an effective mechanism because year in, year out, we track the performance of those companies that make it through the SIFT, and they continue to outperform. And this has been true ever since the days when we were looking at hundreds of deals a year to now when we're looking at thousands with billions of dollars of opportunity coming through the SIFT. These percentages at each stage remain consistent because this is the science of wisdom of the crowd. It's harnessing with the removal of bias, a set of expertise that is much larger than your own immediate team. We have 4 members on the fund, but we have, for consideration of any company, approximately 30 individuals who help us assess the opportunity. Now, the other key element of the expert SIFT is that it is documented, it is rigorous, it is tested, it is proven, and it's repeatable. These are elements that are missing in venture. I mentioned earlier that the venture industry has very mechanisms that not only exacerbate the bias that exists more broadly, they actually almost intentionally work against creating inclusion. And one of them is what I call the gut check. VCs talk about betting on the jockey, and do they believe in this entrepreneur? And that's exactly where bias lives. The variability of asking different questions to different entrepreneurs ensures that bias is embedded in your process. At Astia, we ask the same questions of every company that applies. And the rigor of this process is what ensures that not only do we remove bias, but we get best-in-class investments for consideration into our portfolio. Today, Astia has deployed just over 37 million. We launched investment activity in 2013 under our nonprofit. We have 3 investment programs, and each of them sees a phenomenal track record and growth in deal flow, as well as the success of the underlying portfolio. We have 64 investments, of which only 4 have failed since we started investing. Last year alone, we had 7 exits, and the majority returned a very attractive return to our investors. What this presents to the marketplace is a lens of investing at the early stages. I agree that there will be a fundamental gap after our venture fund that needs to be addressed, because it is our observation that as companies grow, bias doesn't get removed. It's not somehow mitigated by the success of the companies as they grow. So fundamentally, there need to be in the market investment opportunities at the later stages. But today, ASTIA has addressed seed stage for Black and Latina CEOs, direct investments via a program called ASTIA Angels, and the ASTIA Venture Fund, which started investing last year, and as I mentioned, has done its first 5 of what will ultimately be a portfolio of 15 to 18 companies. All of this for us is a bit of a movement. For us, it's about harnessing community involvement and engagement in what is not only an investment opportunity, but an opportunity to change the innovation landscape. And we know that now more than ever, this is an all hands on deck moment, and innovation cannot be canceled out just because of who the CEO and who the founding team represent. It must, in addressing a pandemic, climate crisis, feeding a growing population, war in Europe, all of these need solutions that are real world solutions. And every individual who has an innovation needs to be able to be given a level playing field upon which to raise capital and grow their businesses. And we see that ASTIA as a mechanism and a broader approach for individuals and organizations is viable and a possibility. And it's a mechanism. Investment is that mechanism or force for change to create the world that we seek, and an innovation landscape that includes best innovation, not just the innovation immediately available to the venture community today. I'm going to pass it back to you now, Sayuri, and look forward to hearing Luke's comments.
Well, I think between you and Patience, there are lots of homework everybody on this call needs to do. Not only should we read Patience's book, but we need to read all your reports as well. I think that what impresses me the most is the rigor of thinking and data that you're using to do your work, and also inspire the rest of us to follow in your path. Now let me introduce Luke, who is going to give us tools, not just to look at private markets, but also the, not just the, and also the public market, where really every investor can participate in this journey. So Luke, take it away.
Thank you very much, Sayuri. It's really an honor to be here with you all today and to be here with Patience and Sharon and follow those 2 presentations. It's a tough challenge, but I'm really honored to be here with you all. I am the founder and CEO of Ethos ESG. We work quite a bit with Patience and WoWE, so thrilled to be here with Patience and Sharon. I'm going to talk a little bit about Ethos and our work to enable every investor, whether you're a retail investor or a financial professional like a wealth manager or asset manager, to do values-based investing or cause-based investing. So our mission, and I'm going to move pretty quickly to a quick walkthrough of some tools on our platform for retail investors as well as other investors. But our mission is really to enable every investor to do values-based investing, whether that's focused on gender equity, racial justice, climate action, biodiversity, whatever causes you might care about as an investor. The way that we do that is by collecting a lot of ESG data or environmental social governance data that is out there, from carbon related, so carbon emissions, to pay equity, to diversity stats, to government fines, employee reviews, a whole lot of really disparate data that we aggregate and collect and then use to do meaningful analysis of individual companies on the public markets, so stocks and bonds, as well as mutual funds and ETFs, and then also portfolios, to do an analysis to look at how well aligned are my current investments with causes that I care about from a really rigorous, transparent, data-backed perspective. We use that to do reporting and analytics for investors to say, here's the current portfolio and how aligned or misaligned it is with your values. And then we also do this, provide a lot of support for portfolio modeling to provide inputs into making decisions about which securities or potential investments might be best aligned with gender equity perspectives or other impact related perspectives. Very quickly, there's a lot on this page. Our high-level methodology, I just walked through it a bit, but it is to aggregate a lot of data from company disclosures, from government agencies, from independent nonprofits, to some of our own proprietary research. We aggregate a lot of data and then use that to create metrics, things like carbon emissions or patents or fines and violations, and a whole variety of other metrics. We use that to rate companies and funds, and I want to just walk through a quick example. I'm going to switch over to our retail investor focused platform. So let me open. So our primary customers at Ethos, we serve wealth managers primarily, but we do have some light research and some tools available for every investor. We believe part of our mission is to be transparent, to show ratings and information to anyone who's interested in understanding what is the impact of my investments or potential investment, or even being involved with a company or other security. So I'm here on Ethos ESG's website. I'm going to go to take a free impact assessment. This is the entry point to understanding, if I say I care about X, Y, and Z, for example, gender equity and racial justice and other causes, what are some securities or investments that might be aligned with those issues? So I'm going to pick as an example, there's a few large categories here. I'm going to pick gender equality and also some other ones that might relate to that, or that might be very important as well to you as an investor. So I'll pick health, and I'll pick education and peace and justice. I'm going to click next. And then here I can say what's most important to me as an investor. And then within gender equality, I can say, what do I care about the most? And we use this with our wealth management clients, as well as anyone can come to Ethos and say, here's what's most important to me relative to other causes. And then after this, you'll see some ratings and rankings and information about the companies and funds that align with those values. So I'm just going to pick a few as an example, completely as an example here. So I'll say that within peace and justice, I'll pick a few. And really our goal is to make this a straightforward process for every investor to just say what's most important to you. And then I'll say what I'm interested in is finding investments. So now I can see some information about my impact persona, the causes that I care about, the breakdown of these causes, information about the causes that I've said are important to me, some sample personalized ratings. This would be some example companies that align well with the causes that I care about, some example metrics Ethos is using to rate all companies and funds and your portfolio if you want on these issues. You can click into any of these companies, for example, NVIDIA, you can see some information about across causes, screens that they may fail or pass. If I'm a customer of Ethos, I can see some really more detailed data here, things like what sources is Ethos using down here. So our goal here is to enable retail investors, enable wealth managers and others to really do friendly, rigorous data-backed impact investing. So I know that was really quick. I want to leave time for questions for both Patience, Sharon, and myself. But I'm really honored to be here and would love to take any questions or pass it back to you, Sayuri.
Thank you so much, Luke. This is where all of us can do our research and be part of the solution. So let me invite all the speakers back so we can move on to the Q&A section of the session. And the first question I have is from Ron, and I know Sharon has typed the answer to this question, but I think a lot of the audience probably would be interested in hearing the answer as well. So the question is for Patience and Sharon is, what are the opportunity for individuals to invest in your organizations? And I'd like Patience to go first, and then Sharon, and actually let's give an opportunity for Luke as well to answer this question. Patience?
Because Women of the World Endowment is a C3, we take donations into our corpus. Having one of we have to on building strategic, can invest with us in terms of your expertise as of this moment. But one of the other things that we are looking at doing moving forward is to offer what our portfolio looks like for others to co-invest alongside, right? If you'd like to see what our portfolio looks like, we are an open book. We share as broadly as possible, because strategic influence means that we have to be transparent. And so if you're interested, I will put my email in the chat, and we are happy to share the opportunities that we're seeing so that you can be a co-investor in the same opportunities.
Great, thanks, Patience. And Sharon?
Yeah, I like I said, I love following Patience because I love hearing her answers and learning and continue to learn. We're also a 501c3. For those who don't know what that means, it's a charitable organization. We have underneath that the ability to invest very classically, though. So our venture fund for LPs, it's an opportunity to invest in a diversified portfolio, and you can participate as an LP if you're a qualified investor. If you prefer a direct investment opportunity, we have a membership-based ASTIA Angels, where we curate deals for individuals, family offices, and corporates to consider to invest together as a group, but they invest directly. And then there's also ASTIA Edge, which you can actually choose to donate philanthropic dollars to, which we invest in, or you can seek investor returns and invest as an investor. So we've similarly tried to innovate on the venture model within our own capital. And I would also say you can also make charitable donations to the nonprofit. The nonprofit benefits from all of the investment activity. They get the carried interest out of the fund, the ASTIA Angels and Edge, but you can also make a charitable donation to the 501c3. So we've made giving money or engaging financially as flexible and viable as possible for everyone.
And Luke?
Yeah, thank you. We are a earlier stage tech startup. We completed a seed fundraising round last year, as Patience mentioned. We are looking at our next fundraising round this summer. So if you're interested in potentially participating in that, please reach out to me directly, Luke at ethosesg.com, from an investment perspective. From a just being involved perspective, would love to have anyone visit ethosesg.com to try out the impact assessment. If you work with a financial advisor or an asset manager, please suggest they check out Ethos. That's our customer base, our wealth managers and asset managers. So would really appreciate any connections or involvement there. Thank you.
Great. So I love to see more questions from the audience, but I think maybe our representative of some of the audience has said, boy, there is so much food for thought that all three of you have given us. So maybe take a breather to absorb the information and come up with some of the questions. So maybe I will pose a question to the panelists is, how, and I guess what we are all working towards is systemic change to eliminate the bias that's built in, because we're not changing the actors, we're not changing the people. what do you think it should be the number one focus for us to get this movement further? I'll start with Patience again.
Yeah, I would say that core to any change really that's systemic is the idea of changing the world's view of women as from one of seeing them as beneficiaries and victims to one of seeing them as actors. Here's what we know. Dislocations and disruptions, be it conflict, physical conflict, non-physical conflict, climate change, pandemics, etc. All those things are accelerating. And if we think that the world can beat back those challenges with the same strategy of seeing part of the population as not being strategic and critically important to solving those challenges, we're not going to get it. So to give you an example, and I like very much of what I mean when we say that we're going to unlock so much when you think of women as actors. Imagine an asset allocation room where there are two opportunities that are being looked at. One of them is an opportunity of a male entrepreneur who's just exited a company, come into wealth, and decided that they really know how to build companies, and now they want to be a venture investor, and they are starting a venture fund. They're putting some of their own capital, raising a venture fund, and they want to do, to invest in companies that can grow and solve challenges. So imagine that, and imagine a female who also has started a company, exited a company, now realizes that they know something, want to start a venture fund, and are raising capital. And imagine an asset allocation room where decisions are being made. And this actually happened, where these two opportunities are in front of them. This investment committee reviews the male opportunity and says, this guy is a rock star, we should invest in him because he's going to know how to enable the companies that he's going to invest in. His portfolio companies are going to be lucky to have him, and it'll be a successful fund. And then they turn to look at the woman's fund, and one of the male decision makers says, but why do we want to give her money? She already is rich. She just exited a company. See, the mentality is the woman is a beneficiary, and so why should we benefit her more? She already has money. The guy is an actor. We should leverage him to solve more problems in the world. That difference in how we view people is so fundamentally important to change. And so my view is, if WoWE, if the work we do here, if it does anything else but really fuel that change, we will have made a big difference, because that is a change that the world needs to come to in order to see us all as actors and change makers and solution drivers.
Wow. Okay, Sharon, you get to follow Patience again.
And I'm going to build upon Patience because I absolutely 100% endorse everything she said, as one might expect. And I'll take it one step further to say, then what can you individually do to help us get there? And for me, the call to action is so clear for men and women. Let's be very clear. This is a call to action for all of us. First and foremost, if you are a man, start building out your female business network. Take a look at the LinkedIn connections you have. There were a few years ago where it allowed you to map the gender of your network. I was really proud that mine was 50% men and 50% women, which, by the way, is the model at Astia. Those 5,000 community members, half men, half women. And anytime I start to stray towards a predominantly female network, I shift that, because I know that men and women doing business together is unusual. It's difficult. It is anti-social. What I mean by doesn't follow social normative behaviors. And it's what's required to get us to that point of being able to respect and understand each other. I'll go a step further then for us as investors. Once again, relying on our network is a fail as it relates to Patience's very thoughtful call to action for us all. If we are relying on our network, I'm going to end up with a bunch of white female CEOs. That's just what and they're going to sound a lot like they're from the Midwest, and they're going to articulate themselves as if they were trained by a US Senate staffer in public speaking, which I was, and they're going to sound a lot like they have their master's, which I have. I think the fundamental shift for all of us is critically evaluating our business networks and how they're constructed. And when we start to interact with each other as peers, not as supporting or sponsoring agents, but as peers, that's when you see this shift. And a peer relationship for an investor is an entrepreneur that he has invested in, not an entrepreneur that he's supporting, not an entrepreneur that he's mentoring. An entrepreneur who he has invested in is a peer. And so I encourage us to create peer relationships across gender. I'll never forget, and I'm just going to tell one anecdote because I know we're wrapping up quickly. I spoke to one of the most prominent VCs in Silicon Valley about why he had no women in his portfolio. And he was very transparent that he's a phenomenal husband, father, husband, father, son, all of these things that are not peer relationships in business. And that was his defense, that he surely had no bias against women. And I continued to press him that until they're in the portfolio, you have not created a peer relationship with a woman. Food for thought.
Great. Geared lots of things for everybody to think about. But by the way, you guys all have fans in our audience. I just want to share that Rebecca says she is a proud investor of Astia, so hats off to her. And she also wants to get to know Patience and ask for her contact information. So I see that the contact information is there, but can I ask Amy please to put all three contact information in the chat so anybody that wants to follow up with them have the opportunity to do so. And I think all of them invited folks to contact them. So I feel perfectly okay to advertise that. In terms of Luke, I think the question that we have from the audience for you is, do you only have public traded stocks? And I think you said funds as well on your network. So maybe you can address that.
Yeah, thank you. We do assess private companies as well. Currently about 800 private companies, working on adding more all the time, based primarily on customer requests. So we do look at both. Also just wanted to add briefly to the previous question, fully support and I'm amazed by the answers, those suggestions from Sharon and Patience, fully support those. I would also just mention sort of awareness. I think there's still a lack of awareness that gender equity and other ESG focused investing can produce better returns, better financial performance. In 3 to 10 years, we should have every dollar it's being invested with a sustainability or a ESG lens. I think the case can be made there. And books like Patience's book that's coming out, great for building awareness there. So that's just my short addition.
Thank you, Luke. And I just want to jump in and say that all the proceeds from the sale of the book go to the endowment. It's all it's all assigned to the endowment.
Already ordered mine just now while we were on. Thank you so much for reminding us. Thanks, Patience.
Thank you.
This has been such an amazing discussion, and certainly I will probably view this again because this recording will be available through the MIT SEAG playlist, which is being put together by the MIT Alumni Association. So what an amazing, inspiring discussion we had. Unfortunately, the hours is up, so I have to thank my speaker and say goodbye to you guys for now. And this is a path that we'll all work through, and really appreciate your leadership in this regard. Thank you very much, and see each other soon. Bye.
Thank you very much.